presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Well, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our Believe cards. This is by Robert Bloch. Remember that there's a part of life for which you are the explanation. Market-wise, let's take a look at it out here. We had the Dow Industrials up 69, Nasdaq up 51, S&P's up 12, gold contract down $26.30, trading at $1,265 an ounce. Silver down 34 cents at $19.07 an ounce. Platinum down 15 at $1,464 an ounce. Copper flat at $3.19 a pound. Light sweet crude off 23 cents at $104.12 a barrel. Bonds, you have the 10-year up 3 ticks at 128.29, the 30-year up 15 at 137.13. King dollar down 30 ticks at 80.42. The euro is off 12 at 136, and the yen's trading flat at 101.99. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. You're up $11.50. You're at 1911. We do volume of 576 million versus 554. Bottom line, you get higher price. That means it can go higher, folks. Dow Industrials. We take a look at the Dow. What we have with the Dow is this. We are at 16,675. The high is 16,735. The closing high is 715. Bottom line, you are coming into that area. That's going to get tested tomorrow. Nasdaq Composite. We look at the composite. What we have with the composite is this. The composite goes up 51 bucks today. We're at 42.37. We did 1.7 billion. Now check this out. It's 1.7 billion right now against 2.6 billion. You're at this 42.37 area. Your next swing point is 42.86, which is another 50 bucks up. That can absolutely get tested. Small caps. We take a look at the Russell 2000. What we have with the Russell 2000. Russell 2000 is up $15. We are at 1141, and you know the swing point is 57 bucks. 57. So the swing point is another additional $14 higher. Small caps. If we go to the correlation now, the indices are upward higher. S&P's over the high. Lighter volume. Yes, that means it can go higher. Dow is not there yet. If you want to see what the correlations are inside the ETF structure, this is what you have. You did 63 million shares out here today. That's over the 169 million. Bottom line is that, yes, it's higher price. No one's in the store paying higher price. What happens there? You know, it fails. It hasn't failed yet. It can go higher. That's your S&P. We take a look at the NDX 100. By using the 3 Qs, you did 29 million shares. The 29 million shares is coming into 48 million shares. The high that was generated is 31 million. So you have the high that was generated in the 3 Qs, NDX 100, on March 7th. You came off that high. We went from 91.36 down to 83.28. And you still have a high volume low down there. So what you do have is that low is going to get tested again. Where we are right now, 91.01. Bottom line, 91.36, more than likely is going to get tested tomorrow. That is the high that was generated from March 7th. We go over to the small caps. So the IWM weakest indice even on the bounce, we're up $1.61 today. You did 44 million shares. The 44 million shares are going into 86 million. We are at 113.58. Your swing point up there is 115.02. Deviant said, hey, guess what? More than likely you're going to see that tested also. Gold. What did gold do? Gold got smoked, folks, in a big way. You took out a B point of an ABC structure on the way down. You took it out with volume. We did 234,000 contracts out here today. Took out the 1277 area. That is saying that that baby's going to start moving down to the 1227 area. Now, that is the December levels. The low in this contract of the December level is 1186. It doesn't have to go to that point. You could get a rejection of the highs of the lows. If we go look at the GLD and you want to see this correlation, how this correlation sets up, this is what it is. So the GLD trades at 10% of the price of gold minus the expense ratios, right? We take a look at this. The GLD today did 10 million shares. She takes out the swing point, which is 5 million. She's at 121.85. She wants to basically run down to those December lows also. Now, the December lows inside the GLD, you're talking 12 million shares. That's on the daily. When you take a look at this, when we put this on the weekly, it's going to be hard to basically bust that baby out, because on the weekly, you're dealing with 63 million shares. We'll see what happens when it gets down there. The high of the lows of December are 120 to 119.62, and that's where these babies want to go. Now, silver. Let's take a look at silver. Now, there's a different dynamic that's happening in silver, and this is what it is. Silver hasn't taken out its swing low. You did have the expansion of volume. We did 53,000 contracts. Different setup here, though. So your swing point on silver of this contract specifically is $18.67. We come off that level and we did 52,000. Well, today we did 53,000. And you're coming into a volume, no doubt. It's going to go test it. We'll see whether it can take that away, meaning get underneath it. If silver does basically break down from here underneath the 1867 level, then let me see what we're looking at. If I take this continuous contract and put the continuous contract up, what we're looking at is, here we go, test 1818. That would be the next test. That test there would be the June of 2013 low. We go to the bond market. We take a look at bonds. The ever-ready bunny out here, bonds, no doubt. This is what you have with bonds. The bonds today did 1.7 million contracts, the 10-year. This is a monster ABC up, folks. It's already taken out its B point, had the volume behind the move, all of the above. Bonds want to go not only higher, a lot higher. Had a huge expansion of volume out here today. When we took out the B point, we took that B point out on the 14th of May. We had 1.5 million contracts. This continues higher with 1.7 million. Right now, the yield on the 10-year is 2.514. We'll see that go under 2.5 tomorrow. 30-year contract. We have with the 30-year contract, she did 527,000 contracts out here today. She continues higher. That was a big expansion of volume. No doubt the 30-year is at 137. And that little baby, if we take a look at what she's actually yielding, so that's 3.36 on a 30-year. Imagine 3.36 on a 30-year. That's a cheap rate for going out that far. King dollar. We take a look at King dollar. What do we have with King dollar? King dollar today, sideways move. You did 12,000 contracts. King dollar right now is at the 80.42 level. King dollar is making a run. The larger run wants to make a run up there for that 81.65 area. The next swing point up, where she is going to need some juice coming into it, is only about 30 ticks higher, 300 ticks higher rather. We're at 80.420. It's 80.770. That's the swing point. That was from April 4th. That's where this little baby does want to go. Our phone number is 877-927-6648. Let's go over to Europe. Why Europe? Well, as these markets basically move higher, we got to see where Europe is and what is happening at those highs. So when we take a look at the, oh, there goes, 1 second. Put this back. I don't know why that says that. Okay, so right there. When we take a look at the FTSE first, the FTSE today was up $29. And what we had, let's see what we had. Okay, so we're at 68.44. The high that's going for is 68.67. More than likely, we're going to see that happen tomorrow. Now, the FTSE has had this would be the fourth high in the FTSE. It's given up each one of those since going back from January 21st. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We had the Dow Industrials up 69, Nasdaq up 51, S&P's up 12. We'll be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls. Now, Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow up 69, Nasdaq up 51, S&P's up 12. Let's go to Rick in British Columbia. Hey, Rick, what's going on?
Hey, thanks for taking my call, Tom.
Sure, how you doing?
Really good, thanks. I don't know if it was you I talked to, but I brought up AU about, I don't know, a week or two ago.
Okay.
And I said, man, look at that head and shoulder formation on that thing.
Okay.
You know, the head in March, neckline just below 17, target below 1350.
Okay.
And very often you bounce right back to the neckline again, you know. Very often that's how they work. Now, yeah, so anyway, I mean, we didn't have massive volume today.
Well, in AU we did. I mean, it's an ABC down. It broke the B point with volume.
Oh, yeah, and it's going to do more than a 1-to-1 ABC down. Now, did you have any gold stocks? Like sometimes I don't think you did. Talked about any today. Do you? Sometimes you follow like GOLD, or you have any other stocks where you see where they're going to, or do you think?
Yeah, Royal Gold is the one to check out. Okay. You know, what you had in Royal Gold was right off the gold contract, folks. It's down 284 today. It does 916,000 shares, and it broke the B point with volume. So that's telling me that the actual contract itself wants to move down there too, because that's about the cleanest correlation inside it. Do you know what I'm saying?
So you're looking about 55 on that one?
I'm looking 70. It's a 10-point ABC down. I'm looking at 59. 59. Okay. My take is that these are going to, well, it doesn't have to stop there. Most of them want to go test their December swing lows again. That's what's going on.
Well, I know SLW, which used to be pretty good, but it's been a real dog lately for some reason.
Yeah. That's not acting correctly, period, right.
That one's got volume down at the lows there.
Right.
So anyway.
Well, the SLV is acting cool, though. There's still some divergence here. So the SLV, which trades at the 10% of the price of silver, or the price of silver, actually. Okay, it's the silver ETF. That little baby came down today, 7 million shares, but that little baby's going into 20 million shares and was going into 8.5. So that's, we'll see whether it can hold the price. It got to 18.29 today. Your swing low is 18.16 as well as 18.26, and it held it. So we'll see. Cooking, brother.
Thanks, man.
Now, folks, let's go over to our man, Mr. Basil Chapman at the Chapman Wave. And if you haven't basically test drive his newsletter yet, folks, you can do it right here, right now. The way you do it, you come over to our website at TFNN, go to newsletters, go to trading newsletters. You see the opening call right there. You can test drive it 2 weeks absolutely free. And, of course, Basil has an outstanding program every day right here, 11 to 12 Eastern Standard Time. Call in, talk to him right on your cell phone, tfnn.mobi. You can get all the programming. Basil Chapman, what's going on?
Tom, how are you?
Doing great. You have a good weekend?
A very good weekend. Thank you.
Cool, man. Cool. Absolutely. So we're looking at, I believe I'm looking at...
This is the Dow chart.
Okay.
Yeah, the Dow daily chart, which I show my subscribers to my opening call every day. And they see how the Chapman Wave unfolds. And what we had is that the last peak at 16,735 back on May the 13th had a sharp pullback to the 16,341 level, a 400-point decline. And now we've bounced back. But the Dow today was the only key index out of the New York Stock Exchange and the S&P not to make an all-time high. It missed it by about 50 points. So I suspect it will still do that. And there's a trend line resistance here that I'm looking at, and that says that'll be tomorrow. So that would be around about the 16,760s to the 16,780 area. That should be strong resistance. You're going to be watching it real closely. And when we spoke last week, what I said as for my subscribers, what I had chosen was the QQQ series had a very, very sharp pullback. But the way that the dynamics of the internals with the really big cap NASDAQ stocks the momentum stocks that had 35, 40, 45% pullbacks, seemed to me that could be the driving force in any rebound. And as a result, on the 21st of May, we bought at the opening, it's actually 300% long the QQQ series. It's the TQQQ. And one of the reasons being is that in this pattern, I'm going to open up the day chart so that folks can see. The pattern that I was looking at was a series of highs that were making lower highs. And if the QQQ series managed to, and this is the NASDAQ 100 basically, if it managed to break above decisively above the area of about 88.33, that would indicate that not only would a leg D start, but the technicals, and this is using the MACD, the moving average convergence divergence, and the slow stochastic, could give added impetus. And because they were pressured so much to the downside, their first really big hit in quite a short period, the rebound could go on. And I had no idea whether or not we could retest the 91.36 level. The 91.36 level was the previous high made on the 7th of March. So we've been long, we've stayed long, and what I'm looking at here is that the high today was 91.02. So it's only 35 cents away from making a new recovery high.
Yes.
Still calling this leg D. I've got what I call a left side, right side price time match, which says within the next 2 days, there should be a test of the previous high. So far, the technicals are very good. The real question here, and I think this is the first time that I'm coming up with questions that can only be answered by price movement. In other words, I can't actually just keep looking at the technicals here. Reason being, there's a big question. Is this just a rebound in the stocks like Google, Amazon, Priceline, etc.? Or was that a pretty decent decline? And then, in fact, this is now a new buy signal that could go to a buy mode in the weekly, and I cannot answer it until I see a close, and that'll be a Friday close because it's a weekly chart in the QQQ series, very much over the 92 level, really in the 93.30 area. I'd have to say, you know what? Everything about it looks like it's a leg B to the upside. That says we've got a couple of weeks to go. So the way I'd be looking at it, and then that actually starts a leg F, I believe, in the monthly chart. So we're getting extremely extended. The decision on where to either take profits now, which is 10 points, it's a lot of points. Where to take profits is going to be the issue, and I think what we'll do is just raise the stop on a portion of our position, because I think I need the price to tell me, because the weekly chart, the technicals in the QQQ series, and funnily enough, it's almost the same in many of the indexes, even the ones at new highs. Because the pullback, that March, April into the early May pullback was so sharp, the weekly technicals take a while to heal, basically. So the monthly chart, the technicals are still very good. It's holding that 9-period moving average, that black line that you can see right here. So far, there's nothing that I can say is wrong, other than this leg D looks quite extended. So I'm going to have to allow the price to tell us where to exit. And this particular point, it's a nice situation to have, but those are my parameters. And the moment that the Qs come back and they take out 89 support, that means it's in at least a short-term sell signal. So that's where we are right now.
Listen, folks, you can come over to our website at TFNN. Go to newsletters, trading newsletters. You see the opening call right there. Test drive it 2 weeks, absolutely free. And don't forget, every trading day right here, 11 to 12 Eastern Standard Time, you can listen to Basil. Basil, have a great day, safe day. Look forward to the show tomorrow.
Thank you very much, Tom.
Come right back, folks. Just stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had Big Blue is down at $1.16. You had Honeywell up 39. Oxy was up 48. You had ExxonMobil flat. Walmart was off 2. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
Yes, I am. Thanks.
Cool, man. So we're going to look at a little rocket ship here, huh? Priceline?
Yeah, I wanted to ask you about Priceline. I'm looking at it on a 3-month daily.
Let's take a look. So Priceline, folks, the high for the year is 1378. The low is 787. We're trading at 1259. Stock's up 69 bucks today. And this is an equity, folks. So you talk about coming down quick. This came down from 1378 to 1087. Okay, so go ahead.
That's what I was going to ask you. So do you consider that move off of the 1087 to be a AB equals CD, because it had the move up to about 1165, then pulled back to 1120, and now we're making this next leg? Do you consider that to be AB equals CD or not?
Okay, here, I'm sorry. Say that again now. With the question?
I'm looking at it on a 3-month daily.
Okay.
So I'm wondering if that first leg, A to B would be from 1087 up to 1165 roughly. Then we had a leg down.
Oh, I see. I see what you're saying. Okay. Well, I see what you're saying. The way I'm looking at this is that it wants to go to ICE. So that we're at 1259. ICE on this is 1275.
Okay.
So at 12.7, now we did 1.3 million shares out here today, folks. How we come into this 12.75 would tell you quite a bit. It has, last time with volume was 1333, and the low of that is 1283. So you see, it's going to be kind of interesting when it trades into that also. So your ICE. Yeah, see, that's going to be 1267, and that's 1283, which is nothing for that stock in one day. So your benchmark there, if you're watching Tiger TV, where I have that cross bar right now, that is on the 21st of February. But it's, ICE is laid up right when it went through that downdraft of the March 24th. But that's where it looks like it wants to do.
Okay, so depending on volume, I'm considering, obviously my position is to go short the thing, depending on how it acts. So.
Right. Now, what you should also do, line this up, Brent, also with the weekly, okay? Because what you have here is this. The week that we're talking about, when it basically came down, which is ICE, it did 6.7 million. So in this context, we already did 1.3 today, so the volume would have to kind of dry up pretty dramatically as it got into there. Do you know what I'm saying?
Yes.
And then because we have a 4-day week, you have to make sure that you make sure it's 5. So you take 4, divide it by 4, multiply it times 5 to get the deal.
Okay.
And I would also make sure I'd line this up with a couple of the other high flyers and say, okay, are they dying on the vine when they're coming up? Like Amazon still hasn't moved, okay? That's down off. It's still off $100 from its highs. Google has basically moved up. We're at, let me see, GOGL.
Yeah, I saw a couple of them kind of do that today. Netflix got up to a little bit of higher high, then it backed off a little bit. And so there are some kind of starting to show that they're maybe getting a little extended here. So.
Right, and Netflix, so this is cool when you look at Netflix, okay? ICE on Netflix is 416. We hit 402 today. But Netflix looks like it's going to make that run. But how you get into that ICE area, folks, on this counter trend bounce on the NASDAQs are going to be important. And those high flyers, well, let me just go over to the biotech for a sec, because the IBB says quite a bit, because that's what started. Yeah, see, watch this. So the IBB, this is the NASDAQ Biotech Index, folks, which started the leg down the NASDAQ. That had gone from 275 down to 207. We did today 1.4 million. You're going into 5.4. Well, this is really sweet, okay? Now, ICE is still a lot higher. It's like, oh, man, can you make it? I'd love to see this make it, actually, but it just might fail at 247 versus where ICE is all the way up at that 251. But it's getting close here, man. It's getting close on, and I would watch that IBB, because that's going to be screaming, and the small caps. The small caps can't get out of the way, and they still can't get out of their way. So that is a big heads up. Cooking, brother.
So what's it?
Okay.
6.5 million on the weekly volume instead for Priceline.
Let me get that for 1 second.
I think that's what it was.
Yeah. So the weekly is going to be, 6.721.
Okay.
Okay, man.
All right. Thank you very much, Tom.
Have a great one, man. Have a safe one. And, this is wild, folks. Hey, I got to read this to you because this is so cool. This guy, J.P. Morgan, come on 1 second. Here we go. I got to get J.P. Morgan. J.P. Morgan. I just want to show you how these guys really make money hand over fist. Okay, so this is a quote today. J.P. Morgan's having a conference somewhere, and this is a quote from let me go through it. J.P. Morgan Chase, the world's biggest investment bank by revenue, said a pair of wrong-way bets made by clients at the start of the year is partly to blame for Wall Street's trading slowdown. So they're blaming clients for betting the wrong way, that their trading is going to be off, their revenue from trading is going to be off from 20 to 25% in this first quarter. Citigroup come out with it, J.P. Morgan's coming out with. Some of the biggest wages included shorting Japan's currency and betting that U.S. interest rates would rise more steeply than those of Europe, according to Daniel Pinto, head of the New York-based firm's corporate investment bank. So this is the guy that's head of the corporate investment bank. Neither of those trades paid. Pinto, 51 years old, said today at an investor conference in New York. Essentially, you start the year with the wrong momentum. Where you lose money at the very beginning, you end up probably at a lower risk appetite than you would otherwise. J.P. Morgan warned investors earlier this month that second quarter market revenue will probably drop about 20% from a year earlier, after a 21% tumble in fixed income currencies and commodity trading in the first of the year. That would be J.P. Morgan's worst first quarter since the financial crisis. This is the next one I want you to wrap your head around, though. Another reason for the lackluster results is reduced volatility, which has dropped to the lowest in 10 to 15 years for rates, currencies, and current trading, Pinto said. Now, this is the quote. When the markets doesn't move, that was his quote, it's really difficult to monetize your flows, Pinto said. It makes the market more competitive and margins really tighten up because it costs you very little to provide liquidity, so you provide a lot. Okay, so what this means, folks, when the markets doesn't move, I think that when the markets don't move, that's what I think the quote should have been, it's really difficult to monetize your flows. Just so you understand what that says, this had to be this certainly wasn't to the people that are trading with J.P. Morgan, because what that specifically means is this, is that they love it, of course, when markets are moving. The reason being is that the monetizing your flows means that trading desk for large dealers like this don't trade like you and I trade. They're making huge amounts of money on the spread. So that's monetizing the flow. As the order is coming in, they already know what they can move the order out for before the fact. That's how this thing works inside that community. That's when the screaming gets done about trades that are getting done inside the firms, which they get done a huge way. They have to be reported outside, but when they're crossing them inside, that's where that revenue goes up exponentially. Why? Because you only have to make 2, 3, 4 pennies when you are dealing with the numbers that they're dealing with. And that's why you're seeing revenues that are down. Citigroup, bottom line, Citigroup here. Citigroup chief financial officer came out saying second quarter revenue could be down 20 to 25% from the year early levels in a market he described as becalmed. The decline might curtail overall institutional revenue for the period. Bottom line, it's the same deal there. What you have is that when we look, see, when you take a look at the S&P, folks, is at 1911. But what we have had is that since March 4th, you have basically been going sideways. Today we got over that high, but you've been going sideways. And they need markets, well, even the broker-dealer community, they need markets that are more volatile, and they don't have them happening. If we take a look at Workaday, Workaday closed out here today at 82. She's trading at 87.40. This is an equity that came off a high. The high Workaday come off was 116. She trades down to 64. Talk about getting whacked. Let's see. They're raising in their 215 yearly forecast. We'll be right back. It's Tom O'Brien. It's TFNN. The end of the hour up 69. Nasdaq up 51. S&P's up 13. We're going to come right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV. But if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. And if we go over and we take a look at the ERY, which is the Direction 300% inverse correlation of the Energy Select Sector Index. For one of our tigers, the low out here is for the year is 15, the high is 34. This correlation, folks, is a direct correlation of the XLE. But first we'll look at the ERY. So what the ERY has done is this. You had a nice sign of strength on the 15th of May. We go from a price point of 1548 up to 1625. We do that with 772,000. You came back into that area today with 253,000. Bottom line, it looks to me like this area will hold, meaning these lows are going to hold out here, 15, 18. It's building cause and trying to build cause to get up into an area of 1898. Now, I happen to own the ERY also. If we go take a look at the XLE, and here's the correlation inside it, the XLE, folks, is at 94.91. And the correlation goes like this. You had a high in the XLE May 7th. That was $95.25, 9.6 million. You come off that high with 10 million shares. You come off that high with 11 million shares. We're going sideways now with 5 million. I suspect, number one, you're going to be back down to the swing low, which is the 92, 96. And then we'll see how it can break into the lower range. Now, inside this, if we go take a look at the weighting structure, ExxonMobil is the largest weighting. ExxonMobil is at 101.36. The high that was Exxon had in December was 101.75. So then watch what happened here. That high, folks, had volume of 10 million. We took that high out with 10 million. We got the high, the day the high was taken out was the 29th of April. We get to 103.45 with 11 million. And watch. Then we come off that high with 13. We're testing, coming back into that high with 8. You know. If we go take a look at a few of these, so that's saying ExxonMobil, that's saying it wants to go lower. CVX, okay, which is Chevron. We'll take a look at Chevron. That's the second largest weighting. The low for the year here is 109. The high is 127. And what you have with Chevron is that the high she was trying to get over was 125.65. She spiked it and got to 127, but closed at 125.95. Tested that area, well, the first high with 6.6 million. She tested it with 4.9, failed, and then came down with 6.4. Chevron is actually giving a lot more information as to where she wants to go. And it looks to me that, you know, we're going to get into 117. So that's pretty intense. And if that's, in fact, what you have happening inside Chevron, well, guess what? That ERY, that XLE, and the DU, well, the XLE will go lower, the DUG will go higher, the ERY will go lower. That's how this is set up at this particular point. What we did have out here today, so this is pretty intense. Where is this one? UBS. One of the, I'll find this in a second. But what you had is that, of course, we've had this huge, for the last, well, I guess 2014, it started in 2011. If you remember, the Swiss banks basically got caught setting up accounts for U.S. citizens not to pay taxes. This thing went on for, in this case, the story I'm going to tell you about, this guy, it went on for 17 years. It's pretty amazing. And the bottom line is that he got caught, then he cooperated with the feds, and bottom line is he got five-year probation. What's so intriguing about that, you know, I know this happens all the time, but the reality is that you have a bank, you have basically the people inside the bank setting it up, and you do it for 17 years, and then, you know, yeah, your life is destroyed after the fact anyway. But it seems warped that the people that actually set it up actually give everyone else's name, then do no time when they get caught. You know, do it once, 5 years, I don't know, 17 years. That story just actually, you know, just is like, wow, man, this is, I guess the government is going to, they turn around and say, okay, we couldn't get all the rest of the people. I'll have this story by I'll print it for the next hour, because it's amazing, actually, how many folks, number one, voluntarily told the feds, and they gave them a chance, so voluntarily told the feds, and they had to pay a huge fine, and then how many didn't? It's, you know, in the hundreds of thousands, though. Big numbers. Huge numbers. Don't forget, folks, as you come over to our website at TFNN, our man Andy Hecht, he's got an outstanding workshop coming up. That workshop, it's a webinar. It's going to be on June 7th, 9:30 in the morning to 11 o'clock. It's only $99. It's going to be an amazing webinar. But if you sign up right now, it comes with a 7-page report. And the reason you want to sign up right now, you're going to get that report as soon as you sign up. And what the report is all about is energy opportunities coming during the summer of 2014. And just to give you a little hint, you know, as Andy has been on, he's been talking about what happened with natural gas. Well, guess what? Natural gas is moving, folks, okay? Bottom line, you're up 1.8% today. You know, there's a lot of other things that are inside that report. If you'd like to get over to our website at TFNN, you'll see it right in the very front. Energy opportunities during the summer of 2014. Saturday, 9:30 to 11. You sign. As soon as you sign up, you get the report right here, right now. And don't forget, of course, if you can't make the webinar live, it's going to be on your page for 1 full month. You can go over it as many times as you want. And what is he going to be talking about? Well, the frigid winter depleted some of the key energy stockpiles. He's going to be talking about storm activity in the Gulf of Mexico. And, of course, Russia's going to come into play. When Andy does these workshops, of course, he is using the future market, and he's correlating that back to the ETF market, folks, that you can be trading inside the ETF structures, the commodities that he's talking about. We had the Dow finish up 69, Nasdaq up 51, S&P's up 12 bucks. You stay right there, folks. We're going to be coming right back. Gold took a smoking out here today. GLD, what does the GLD do? She breaks a B point, breaks it with volume. We did 10 million shares out here today. That B point had 5.9 million. You're trading at 121.85. She's going to be going down and testing that 116 area. You stay right there, folks. We're going to be coming right back. We had the Dow finish up 69, Nasdaq up 51, S&P's up 12, gold down 27, silver off 35, platinum down 16. Bonds, they continue higher, folks. Yields are going lower. And King Dollar, she wants higher price. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Rich in Taunton, Mass. Hey, Rich, what's going on?
I just want to let you know that I listen to a bunch of radio shows and financial related, and TFNN has the best stuff, most interesting, even if you don't understand everything about it. It's really good stuff.
Thank you so much, man. I appreciate that. I love the part about not understanding it. No, I know it's a different language. I mean, well, the way I speak is a different language anyway.
Yeah.
Oh, listen, man, I appreciate you listening out there. All you folks, thank you so much, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our Believe cards. This is by Alberto Ferretti. I start with an idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. We had the Dow Industrials up 69, Nasdaq up 51, S&P's up 12.5. Gold contract down $27.40, trading at $1,264 an ounce. Now, what you have with gold, folks, gold contract today broke a B point, broke it with volume. We did 236,000 contracts in the gold market today. Takes out that swing point from 1268. We're at 1264. That swing had 189,000 contracts. What that sets up is an ABC structure on the way down to 1227. We'll see if it goes after the actual swing low, which is 1186. I suspect what we have here is that it is definitely going to go, well, it's an ABC structure on the way down. The probability that it gets the full one-to-one price projected went up dramatically because we take the B point out with big volume. What very well could happen, if we go over to the GLD for a second, which is a Street Tracks Trust, that also took a B point out, took it out with volume, and we put this, when you put this on a weekly, what you're going to see is that it's going to be really tough to break down the low. Oh, actually, I'll put it on the monthly so you can see the December low. The December lows out here, what we have is that she did, okay, so we did 185 million, and thus far we're only at 92 million. You know, so bottom line is I like to see this get down there pronto, because then what it very well may do is the high of the low is 122.32. We're underneath that right now. That's on the monthly. Now bring this to the weekly so you can see what I'm looking at. When we take this to the weekly, it's like, okay, are you going to try to get in and, you know, test out the 120.77 area and reject it, or are you going to get right down to 114? You know, we'll see how that shakes out. But bottom line is that gold got smoke, XAU, HUI. We won't know until, I don't get the volume from the XAU and the HUI until later the evening. That's how the volume works in the XAU and the HUI period. But I suspect that they are ABC structures on the way down. XAU went down 314, and in both those cases, you're looking at the December lows. Divergence inside the marketplace is still there, inside the metal market. And what it is this. Silver has not taken out its swing low. We did 53,000 contracts. You're going into 53,000. The low, however, we got to today is 1902. The low is 1868. It's very well, you know, basically it'll go after it the way that the SLV is trading, which basically is the silver ETF, goes like this. That was down 30 cents today. Volume was contracting where it absolutely did not contract inside the GLD. We did volume of 7.8 million out here today. She's coming into 22 million. She's coming into 20 million. You know, so, you know, it's not out of here yet. You can get a spike underneath it, but I like the way the volume characteristic is inside that gold contract. Oil, we take a look at the oil market. What we had with oil is this. Oil, sideways move up here today. We did 158,000 contracts. Let's see what she looks like. We're trading out, or at 104.17. Oil's going to have to get back inside 103.11 before it actually gets in a lower range. You know, so we'll see how and if she does come back inside that area. I expect she's going to, because when you take a look at a longer-term chart, this is only a counter-trend bounce on a move that wants to go lower. Bonds. The 10-year and the 30-year, folks, continue to higher price. Both of those, you know, bottom line, want to go a lot higher. When you take a look at the yield structure, what you do have inside the yield structure right now is that we're dealing with a 10-year that is at 2.514. I suspect you're going to see that get under 2.5 tomorrow. And the 30-year is at 3.1. King dollar. What King dollar has done is this. King dollar basically wants those swing higher points. We did 12,000 contracts today. So your higher price that the King dollar is going after is that the 80.77 as well as the high that was generated on the 21st of January, which is 81.50. There's still inside the gold and silver equity market, there's still a bit of divergence, meaning a few of them want to basically go back to that December swing lows. Some of them don't. We'll see how another down day in gold operate with the rest of the equities. A couple of them come down, if we go over to Rheingold Resources, RGL, not Rheingold, Royal Gold, what you're going to see with Royal Gold, she took a B point out, took it out with volume, and she's one of the best indicators as to the actual physical price of gold. Royal Gold kind of sets it up pretty good. Now, the cool thing, though, is she broke the A point on the way down, B point rather. We're at 61.14, but the A to B equals C to D is like $59. So it's a 10-point ABC structure down, but off of the C point at 69. And that, of course, is it going to be one-to-one ABC structure down, or is something larger in the making out here? After the close out here, what we had is that where is she? Workaday, WDAY. This is a cloud-based application. It's so funny that they called it Workaday, but bottom line, it closed up $3.83 at 82.13. It's trading up another $4 right now at 86.80. This is an equity that already had gone down from 116, got basically cut in half to $64. She's making her way back up to ICE. ICE on this is 92.56. That is on the short term. And when you do take a look at this, and we do put this on a monthly basis, what you are going to see is that you came off that high with monster volume. It made a high on a monthly basis with 32 million. You come down with 79. ICE is laid out at approximately 89. So how we get into that level is, you go into that level and you die in volume into that level, that is going to be the end of that bounce. There's a 12.3% short position in that equity, so unfortunately, you wouldn't want to be short in that equity, because when you have such a position that is that high, bottom line, short position that's that high, you get more buying pressure as this equity continues into a higher price. The energy market, the XLE, that wants lower. The financial market, the XLF, this one's really interesting here. For a market, top line market, meaning the headline news, the Dow goes to another, tries to get to a high. The headline news, of course, though, is the S&P made a new all-time high. The XLF, which is the second largest weighting inside the S&P, could not do that. The XLF right now is at 22.23. We did volume of 23 million. She was coming into ICE. This is one of the first ones that have hit ICE, 59 million. She got to 22.33, and that was over ICE. ICE right now is at 22.15. So what you want to see, which we don't have yet, is a close under the 22.15. That's where she came off the high. We had made a high with 67 million. She comes off that high with 59 million, 76 million. Then she basically hits a short-term low in April of 76 million. She had a sideways move. Didn't have the juice behind the move into higher price today and gave up some of it. Citigroup and J.P. Morgan, they both came out. J.P. Morgan had come out earlier saying that their trading revenue for the quarter would be down 20 to 25%. Citigroup came out with that today, actually intraday. The stock was trading up at 48.35. They basically gave up about 75 cents. Citigroup can't even get into the gap. That gap down, that high there is 50.58. Just didn't have the juice to get into it. Big Blue, IBM is having trouble. Technically, has been having trouble technically. Fundamentally, what IBM has been doing for the last 5 years is basically laying people off, buying back stock. One of the largest problems today, however, was China saying the Chinese government is reviewing whether domestic bank reliance on high-end service from IBM compromises the nation's financial security. They get bigger problems. And that's one of them. It's Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. We had the Dow up 69, Nasdaq up 51, S&P's up 12. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 69, Nasdaq up 51, S&P's up 12. And as we do each and every Tuesday at 20 past the second hour, we got our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, 3 to 4 Eastern Standard Time, right here. Andy has an outstanding show on TFNN. You can call in. You can ask him anything and everything about the markets. All the programming at TFNN, folks. You do 9 hours of programming every trading day. You can get it live on your cell phone at tfnn.mobi. Now, we're coming into the summer, Andy's going to be doing an amazing webinar. That webinar, folks, is June 7th, Saturday morning, 9:30 to 11. You can come over to our website on the front page and sign up right here, right now. When you sign up, you immediately get the 7-page report that Andy has written up. Outstanding report. The webinar itself, 9:30 to 11. If you can't make it live on Saturday morning, it's cool. Our technology allows it. It's going to be on your page for a full month. Andy Heck, what's going on?
How you doing, Tom?
I'm doing great. You having a good day?
Yeah, you have a good long weekend?
I did. You know, having that extra 1 day off, okay?
Oh, it makes all the difference.
It's huge. There's no doubt. And it's funny, folks. It seems like, okay, 1 day, what's 1 day? But 1 day is a lot. You know, when it, it's really sweet, actually. I guess we get used to it, though, if we're always did 4-day weeks, right?
Yes, yes. Well, I'm hoping that tonight my Rangers punch their ticket to the Stanley Cup Finals.
I know, man. I've been rooting for them. That's a beautiful thing, man.
Yeah.
You know, it's amazing, and not so much the last game. The game before that, though, man, they got so many shots on.
Oh, I know.
I mean, the score didn't dictate as to what the Rangers actually did. I mean, they were.
I know.
Yeah.
And so whoever they play, I mean, the Kings look unbelievable. They look like they're cruising right through.
It's going to be quite a series, I know, man.
Well, whoever it is, we got to get there first, and hopefully we do it tonight in Montreal. We'll give it a shot.
That's cool, man.
All right, so the gold market got kicked in the guts today.
Yeah, it got destroyed. ABC struck you down, right?
Yeah, yeah. I haven't loved the gold market. What I do really love, and I continue to love, is I love the relationship trades. I love long silver short gold. I love long platinum short gold.
For a few weeks, exactly.
Yeah, I mean, and they're doing well. I mean, even though silver was down 37 cents today,
right?
You know, it's come down about a percent on that ratio, so that's looking good. And the platinum gold differential is now at $204.
Okay.
And I think, you know, 250 to 300 is in the cards here.
No, there's no doubt. And, you know, when you really look at the gold market, I mean, platinum's not off at all. Really, you know what I'm saying?
Right. No, platinum's actually, in the last month, about $40 higher.
Yeah, exactly.
On a relative basis. Yeah. So that's what I'm watching. You know what else interesting today?
What?
Very interesting. The JBS Pilgrim Pride Corp.
Okay.
Paying $5.6 billion for Hillshire Brands. To expand its sausage link. No pun intended.
Yeah.
So JBS is a Brazilian company, and they've spent $17 billion in the past decade to overtake Tyson Foods.
Wow.
They bought Smithfield Foods' beef packing business in 2008 before the Chinese came in and bought the rest.
Okay.
And JBS wants exposure to chicken, poultry, beef, and pork. And today's bid for Hillshire Farms would give JBS the third leg of the stool and a big piece of the U.S.-based pork market.
Pretty intense, no doubt.
Yeah.
You know, it being Memorial Day, of course, Cookout City, you know, starting driving, of course, but what happens, folks, is the start of heavy cookouts, too. And, you know, I was in a couple different markets, and, man, the price of organic meat is through the roof.
Oh, it's through the roof.
It's going to be interesting to see, folks, how long this can stay up here. You know.
Well, I tell you, I'm getting a little bit bearish on cattle here for a couple of reasons. First of all, we've backed off the recent highs, about $1.40 a pound.
Right.
Second of all, little news item about a company called Wolverine Foods, a Michigan-based meatpacking company.
Okay.
They recalled 1.8 million pounds of ground beef in 15 states due to E. coli.
Okay.
And nothing can destroy the cattle market like tainted meat.
Right.
You know, if you remember what happened when we had that outbreak of mad cow disease.
Oh, I remember.
Cattle just disintegrated.
Right.
Now, I'm not expecting anything like that, but we could get a nice little pullback from 137 down to 130 pretty quickly in cattle.
Yeah, no, I can see that. And what happens, just so you understand, folks, not that it's always the same way, but when E. coli, okay, so we're in the probability business. When E. coli comes in, when you're in the supermarket, when you're buying the packaged hamburger, and the packaged hamburger would be specifically, you can see rolls of it, and it's manufactured in those huge plants versus whether, sometimes if it's a Publix or one of your local supermarkets and you see them in the back, they're doing it. There's a big difference, just so you understand what the difference is. And most of the time, where the E. coli is coming out of is when there's these large plants. You know what I mean?
Yes, absolutely. Absolutely.
Yeah.
And look, it puts people off beef. If there's even just a little news item about it, they're going to avoid it.
I won't buy. I have. If I'm going to eat hamburger, I have to know that thing is, basically butchered in the back room and put through the deal. Just
I do even more. I buy a sirloin. Yeah. And I have them go in the back and grind it.
Nice. Oh, baby. I like that.
It's I want to see it, because I'm always afraid of E. coli. It's the worst. Getting food poisoning is the worst feeling in the world.
Yeah, that's a fact.
It
and
is.
You don't want to be in your car when you get it.
No. You don't want to be anywhere but in your house. That's for sure.
Oh, man.
But very interesting markets. I mean, kind of down across the board. Grain markets are coming down. We had the soft commodities pretty much weak across the board, except for cocoa.
Let's walk us through. We have the whole Midwest, the wheat basket, and the whole ball of wax. Walk us through whether it's wheat, soybeans. Now, they're growing right now. So walk us through how this works in the summer.
Well, yeah, they're finishing up planting. They're finishing up planting on corn and soybeans, particularly. Let's say, wheat is a different animal because we're only the third major planter and exporter. And quite frankly, wheat's come down to a level where it's so brutally oversold, I expect it to bounce. Soybeans and corn, a little bit different story. You got a couple of things at play here in terms of the next couple of weeks of prices. Planting's done, so it's all about the weather. But then you got, first Monday of the new month, you got a USDA crop report.
Okay.
And that will, of course, look at these markets with rose-colored glasses, and you will get the best possible output projections for corn and soybeans. And you might see some pressure, particularly in the beans, which haven't come down that much. Let's remember, nearby soybean inventories continue to be low from last year.
Okay.
And, China's been importing a little bit, but they've canceled a couple of shipments. And there's a lot of inventories of corn around. So I'm really looking for some selling in the beans coming into the USDA report here. I think that's the sector that probably has the most downside. Remember, corn has moved down from 520 to high 460s. Wheat's gone down from 740.
Corn almost went down limit today. Corn, it was down pretty. It wasn't down that bad. It was down 1.73%. But
down a little bit. I mean, we were down 8 cents or so.
Yeah.
But soybeans, soybeans really haven't felt it because inventories are low. But soybeans could feel it.
You stay right there, folks. Andy and I are going to be coming right back. We had the Dow Industrials finish up 69, Nasdaq at 51, S&P's up 12. We'll be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got our man, Mr. Andy Heck, with us. And, folks, Andy is having an outstanding workshop. It's going to be on June 7th. That's a Saturday morning, 9:30 to 11. You can come over and sign up for it right here, right now. It's only $99. When you sign up, you get a 7-page report immediately. Check it out on the front page of TFNN. We're talking with Andy right now. We are talking weather and we're talking commodities, because when we do talk about the workshop that he's doing, what specifically it's going to be about, folks, is energy and weather. Energy opportunities during the summer of 2014. It's hard to believe we're approaching the summer of 2014, man.
Yeah, we're in there already. It's after Memorial Day, right?
That's right.
It certainly feels like summer here in Vegas. It's 104 degrees today.
Oh my God. Yeah, it's we're still livable here in Florida. It's been an amazing winter, but 104. But I know that's dry heat out there.
104
right?
is fine. 120 is not fine. I take 104. I actually played golf the other day in 102. It was fine.
Did you?
Yeah, it was fine.
Well, it's fine because you've lived there for a while.
Yeah.
If you go into Vegas, folks, when they tell you it's dry heat, number one, I'm sure it is dry heat, if that's what it is. But the bottom line is that don't breathe it in because your chest absolutely burns. beyond
well,
belief.
You know, 100. Listen, I lived in Florida too for a while, and 100 in Vegas is like equal to like 80 in Florida.
No way. You've been in Vegas too long.
I'm telling you. It's 120 where it gets. Anything over 110, I don't play golf in that weather.
Oh,
that's just
thank
too
God.
much.
Thank God.
That's too much. But 100's okay. That's like our average.
Listen, I know, man, I know.
You get used to it. You get used to it.
You do get used to it.
You really do. It's really not that bad. And actually, this coming weekend, I'll be driving across the mountains.
Yeah.
And Tom, it's the most amazing thing.
Okay.
You know, when you drive to California on the 15th.
Yes.
And you go through those mountains, the temperature drops somewhere between 20 and 30 degrees.
That's cool.
And it'll be, I'll be in like Santa Monica area next weekend.
Oh, nice.
And it's, it'll be 75 degrees and beautiful.
Yeah, you'll be grooving. So how long a drive is that?
It takes me about 4 hours.
Oh, that's nothing, man. See, that's why Vegas is so popular too, right? I mean, California is like nothing for you. 4 hours is nothing.
You gotta go.
We
You gotta go on Friday.
And we're still in Florida. Yeah.
You gotta go on Fridays though, because you gotta go against the traffic. Because if you drive from L.A. to Vegas on Friday, it takes about 7 hours because of the traffic.
Oh, that's funny. Oh man,
you gotta go. You gotta go counterclockwise.
That is funny.
Yeah. Anyway, so markets, across the board soft today. I'm trying to analyze this gold move.
Yes.
Let's put up a 10-minute chart because I know a lot of people are interested in what happened today and why it happened. First of all, options expired today.
Right.
So that was that always makes it move. And we got most of the move here. If you look at a 10-minute chart. From what it says on my chart, 9 a.m. I guess that's Eastern time. Let me see. Maybe that might be Chicago time.
It's Chicago time, yeah. So it's that's when it stopped moving. At 9. Right, so that's
over the counter option expiration, I guess.
Exactly. Yeah, that's when it went to 1279 and has the most amount of volume on that 1279 to 1271.
Right. We did during that period. We did 13,000 contracts in a half an hour.
Right.
And out of a total market volume of what, 300 and change today?
Yeah, I have 280 something.
I think that's just in the active month. Let me just.
Yeah, no, it is. That's I'm giving you 236,000 the active month. Yeah.
Right. So we did a okay, all right. We did fair volume. Price came down hard on option expiration. Price also came down because, news came out of China today. Their gold imports for the month of April fell. There was 65.5 metric tons as compared to 80.6 in March and 76 a year ago. So that added to it a little bit of fundamental news caused it to come down. But, the price comes down, the Chinese will buy it again.
The December lows look like they want to be, well, it might be just the highs and lows, but it looks like they're going to be tested.
It's possible.
It's
possible.
That's not the end of the world. That's what it really comes down to.
I stay with my trades. I mean, like I said, I want to be long silver, short gold. I want to be long platinum, short gold.
Yep.
So, that's the right side of this thing. Now, is silver going to crack below that recent low around 1860 and change? I don't know, but the market's acting very, very quiet in silver here.
And, it had a shot today to basically take that swing point out, and it didn't do it. And so we'll see. I mean, this is not over by any means. I mean, it's going to go after it. You're at silver's at 1906, so it's already into the high of the low. The high of the low, folks, is 1925. But guess what? When you take this much energy out of whether it's an equity, we're talking a commodity at this point, before the swing point, that's like, if you're running, folks, and all of a sudden, you're in a 3-mile run, and the first 2 miles you basically were running, the last half mile is sprinting, well, then you get nothing left. So it's going to be interesting to see how it comes into that swing point,
Talking about sprinting, let's take a look at cocoa. Let's look at something positive today.
Cocoa.
Cocoa's interesting because cocoa went all the way down to 28.49.
Yeah.
And that was on May 8th. And then turned around, and now we're up at...
look at that.
3,026. We made a new high above the March 14th high of 3,047. We actually traded to 3,052 today. Market's looking a little bit overbought, but this is a long-term demand-based rally, and I think the next area we got a target here is about 3,200 on cocoa.
And that would be, yeah, because I mean, if this can launch this area, let's see. So the A point on this is 26.43. That's okay. So it's a 400, which would give you 32.49 is the price point.
Yeah, I'm looking for 3,200.
Yeah,
you never can sell the highs. Yeah, but I mean, demand in China for chocolate-based confectionery products continues to grow. Yeah, I do have, we talked about weather a little bit.
Yes.
You do have the potential for an El Nino this year. They're saying now 75% chance. That causes either excessive rains or droughts in these growing areas. And when I say these growing areas, I'm not talking about the Great Plains or the Midwest. I'm talking about the equatorial climates where they grow things like sugar, coffee, and cocoa.
Yeah.
Countries like Ivory Coast and Ghana and Brazil and Malaysia and Indonesia.
I would say that the odds of having a heavy, unpredictable type of weather this summer are pretty good. And all where I'm going with that, folks, is just because our weather and the winter was totally unpredictable and crazy, and it has been for the last couple of years. I mean, what is really happened, which is pretty amazing for all us folks in Florida, is that we haven't had the storms that we had. Like last time we was big on storms over 5 years ago, and on a longer-term basis, I can see that they can lay off us for a few years because of the fact we got hit so many times, one after the other after the other. About 6 years ago, folks, we got 5 in a row.
Yeah.
But it's intriguing because it's like, okay, this weather, let's see, I was just talking to someone. I forget, it was yesterday. Oh, I know what it was, right? Up in, well, actually, this is a further north and Florida. So when I say this is the St. Pete, Clearwater, Tampa area that we've been really lucky. Further north, they actually got hit with hail balls the size of golf balls yesterday.
Yeah.
And
all it takes is one. That we had a very quiet year. That year that Sandy hit New Jersey and New York and Boston. Right. And all it takes is one pointed at the right, infrastructure or whatever. So, it's going to be an interesting season this summer, especially with the current level of natural gas inventories and certain things like that.
Well, there's no doubt. I mean, natural gas stop moving today.
Yeah. Well, still in the range. Did you see that report that said that food prices are like 33% higher?
I didn't, but, depending what you eat, there's no doubt. I mean, if you eat...
I think back, I think back to when I was trading at Solomon and those days, and I was watching all these things. And I remember corn was like a $2 to $3 a bushel commodity.
Okay.
Now we're a $4 to $5 a bushel commodity. Soybeans, $8, $7, $6.
Sure.
Now we're 12, 11, 13, 14, 15. Wheat, $2, $3. Now we're, 6, 7. It's now $6.40. They're saying it's cheap. Prices are much higher.
They are. And what happens, folks, and this is what gets really intriguing, I think, of the commodity market, is that time, and that's a long time frame, no matter whether it's a commodity or not, guess what? Everything's going up. And it does go up. And,
everything. Gold, man, it was $300 an ounce. Now it's $1,200. We're talking about it's going to dose to $11.80. Oil, $40 a barrel was the all-time high before 2001. Now we're $104.
Well, it's going to be interesting.
It's everything.
It's going to be interesting to see in the fracking market. I read an article today. There's going to be a lot of people that are...
I saw that.
Yeah, that are going to be...
You're going to see bus. A lot of bus
in it.
Yes, of course. They're putting billions in.
Andy, you have a great one, safe one, of course.
Let's go Rangers.
Let's go Rangers. Awesome, brother. I'll be rooting for you tonight. You stay right there, folks. We'll come right back.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an an introduction to what he'll be covering so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome, folks. We had ExxonMobil was flat at 101.36. We had Oxy up 48 at 97.45. Schlumberger was up 77 at 102.16. The Oil market itself basically was flat, slightly lower. When you do look at the XLE, the energy sector itself, that little baby, we'll see whether it wants to test the high once again, but it's getting tired up here, particularly getting tired when, in fact, the S&P has turned around and made an additional high out here today. So inside the S&P, what is still driving that is information technology. Information technology is still the highest weighting structure inside it. Now, when we take a look at the NDX 100, okay, so let's go over and take a look at the 3 Qs. So inside the NDX 100 thus far, what we have out here is that she's at 91. If we use the 3 Qs, 91.36 is the high. So bottom line, that wants to get tested. Inside the NDX today, what the stocks that were driving it higher was Priceline was up $61, Wynn was up $770, Alexa Pharmaceutical was up $590, and you had Facebook up $212. If we just start with Priceline, Priceline had already gone down from a price point. I think it went down $300. So it went from $13.78, down to $10.78, $10.68. So it goes down $300. You've done a counter trend bounce. That's not over, I suspect. And why? Because it looks like it wants to go up to ICE, which is $12.75, which that's another $15 higher. The Wynn, W-I-N-N, that's Wynn Casinos, of course. That was up $7.79 out here today. That also is a stock that had come down dramatically. We went from $249 down to $188. You're doing a counter trend bounce, same type of deal. ICE on this baby, which like it's going to basically hit, is $223. Alexa Pharmaceutical, let's see, NDX, let me get Alexa Pharmaceutical up here. Wait, there she is, ALXN. That was up $5.90. This is an equity, not down that bad. That's down from 184. Oh, got 136. That was a big hit, man. Okay, and this is going up to ICE, too. So when we take a look at the NDX out here today, 3 of the largest weightings basically look to me like they're just counter trend bounces after a downdraft that was dramatic, but taking it up to the highs. Staples was going south out here today, down 23 cents at 11.42. Monster Beverage was down $1. We had CTRX, which was down $1.16. That's Catamaran Corporation. And ORLY, which is O'Reilly Automotive, was down $171. Let's go take a look at O'Reilly Automotive. So these auto zones and these guys have been going higher. Yeah, and this is just a consolidation. This thing is a monster ABC up, actually. So A point is 78. Wow, B is 135. So it's 55-point ABC structure on the way up, gives you a price point of 175, and we've hit 155. So this one's going to be intriguing. If you're looking at this, you'd want to basically wait until see how we'll be testing the 135 area. It looks like that can be tested. Inside the financials out here today, if we take a look at the XLF didn't have any juice, up 19 cents. You know, start giving it up. It's going to be interesting to see if, in fact, the XLF can't get out there. The banking structure itself has been coming out, you know, bottom line, saying that their trading revenue is going to be down dramatically, 20 to 25%. That's what J.P. Morgan said and Citigroup has said. J.P. Morgan is off that high of $61 or at 55. No juice whatsoever. We did 14 million today. This divergence, folks, is important to pay attention to, meaning that you have the S&Ps at the high. You know, the Dow isn't there. Small caps in particular are basically not only low, the small caps just can't get out of their way. The bounce of the small cap is pretty anemic. We take a look at the IWM. I was up $1.61 today, and you know, ICE is set up somewhere around 113.58. 114.65 is a number that it can get into. What we will have happen here is that you're at the end of the month, the beginning of the next month. You know, tomorrow we'll have some real trading. Thursday, you're going to have some real trading. Friday will be light again. You got to remember summer trading. Mondays, Fridays, going to be lighter volume. If you're a bull, of course, on lighter volume, you want the market pulling back in the summer versus going up. If you're a bear, you just want the opposite. Does it make a difference? Yes, it absolutely makes a difference. In the correlation of where this baby wants to go. Some of the large momentum stocks, Amazon still can't get out of its own way. We're still trading at 310. Google, decent counter-trend bounce out here. That bounce looks like it's almost done. Google had gone from a price point of 612 down to 511. You know, we're at 574 right now. ICE is set up on Google of 586. So what we do have is that you have the end of the month, you have the beginning of the month window dressing, and you know we'll see whether that market can stay higher for the next few days as we go into that. If we go look at the UK is approaching its high. The last three highs I couldn't handle. That's only 25 points higher. We're at 68.44. It's the 68.67. The DAX DAX went higher yesterday and went higher today. The DAX is over the past four highs. We are at 99.40. That's $50 over the last highs that the DAX has been in for quite a while. You know, so we'll see if it can basically stay up over that level. 90. Yeah, it's over that pretty good. Right now, it's over pretty good. And what does get intriguing, of course, is that the NASDAQ does like to trade like the DAX. I don't picture the NASDAQ getting up into new high space. The composite itself is at 42, and your high out there is at 43.71. So the composite would really have to get some heavy juice going. What we did volume-wise today in the composite is anemic. We did 1.7 billion, and you're going into 2.6 billion. So bottom line is that you're shot by a big number. Can the composite get up to that swing high that we're talking about? Yes, that's 42.67. Don't forget, folks, our man, Mr. Andy Heck, is going to be doing an outstanding workshop for you. That workshop is going to be on June 7th. That's a Saturday morning, 9:30 to 11. You can sign up right in the front page of TFNN. It's only $99 when you sign up. You get a 7-page report immediately. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being there, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow. Look at them, folks.